Are FHA loans assumable? The answer is yes. Who might this benefit? This might benefit a seller who's trying to make their home more attractive in a hard market. And right now, it's a hard market. Why? Interest rates are higher. And so, if you look at statistics, inventory is increasing. The amount of people who are listing and then pulling their listings off the market are increasing. And then the number of buyers is low. I mean, it's a fact, right? So, for a seller who wants to make their property more attractive, if they have an interest rate that is from those lower years that we just lived through, those unicorn years, then it makes your sell more attractive. If the borrower or the person who's purchasing your house is credit worthy, right? Likewise, if your family, say something happens in a family and the family has to decide how they're going to keep a property in the family, having an assumable mortgage is easier than having to do the whole refi process, right? And so, especially if you have a low interest rate, right? So having that FHA product that's assumable can be a benefit to you. And so, just things to know, to do the process to have the mortgage assumed by somebody who's taking over the mortgage. One, the new borrower, the person who's going to assume the mortgage, has to be found creditworthy. Just like if you're applying for a mortgage, right? The DTI has to make sense. Everything that underwrites FHA has to be underwritten with that person. The second thing to know is that the lender is going to do a release of liability form that would transfer everything from the person who owned the mortgage originally to the new person paying the mortgage. So, it's a good situation. Things to know, okay? If this is going to be a secondary home or an investment property, certain lenders make you jump through more hoops than others to get that done in the assumption process, right? So, just things to know about how this assuming process works. If you have further questions, feel free to reach out to me.